Good day, ladies and gentlemen, and welcome to our remuneration trends analysis for the Namibian Financial Services Sector as of August 2020. There is no doubt that 2020 has not been a forgiving and very prosperous year to date, but we find ourselves halfway through the year already. We are continually challenged with remunerating responsibly in light of the economic challenges. We are confronted with the balancing act of maintaining a sustainable, affordable wage bill whilst sustaining a remuneration philosophy which can attract, motivate and retain our talent. Herewith we wish to share the remuneration trends analysis for the Namibian financial services sector, as we need to stay informed of what's happening in the market and market movements. Now, in light of everything that's happening in the economy and in our day-to-day lives, we now ask ourselves a question: why do we need to keep track of market REM trends? Benchmarking in unprecedented times like these is quite essential. Now, even though we are in an economic downturn, the reality is that after the downturn, there will be a level of normalization and renewed growth. This means that the operating models of many organizations will have to adapt to the change and would have to adapt very quickly. At the same time, your employee value proposition must be realigned to attract and retain the skills necessary. The question is whether you understand the impact on your remuneration structures and whether you are preparing for the potential upswing post-COVID-19. How will your reward philosophy be adapted to address the new norm, if at all, or are you planning for the future fit for purpose movement? Remuneration decision-making cannot take place in a vacuum. Losing track of what is happening in the market could become a very costly exercise. It's important to understand what your competitors are doing in the remuneration space. While all organizations are looking to reduce costs, not benchmarking in these unprecedented times could be a very expensive exercise indeed. Once you start lagging the market and your turnover increases, it may cost far more to catch up to the market than originally envisaged. This will of course be further exacerbated by cost-cutting initiatives such as freezing increases. We will be monitoring the movement of remuneration data in the REMchannel online salary survey very closely in the coming months to establish which skills may become essential skills attracting premiums in the market. Hence, you need to keep up to date with what's happening in the market, and hence our reason for sharing monthly information with you. The source of our data is PwC REMchannel, the largest online salary survey in Namibia. What is REMchannel? REMchannel is an internet-based electronic business tool that can be customized for complex remuneration practices. It's an extensive and detailed current database on remuneration and benefit statistics, and it's specific to Namibia. REMchannel's distinctive features include easy data submission and retrieval, it's real-time, it's instantaneous, flexible, and we have a stringent data validation process in place to ensure that we capture relevant current remuneration data. The data is accessible online 24/7, 365 days a year. Reports can be customized for you. The data is published every month. We have more than 60,000 active data points, 1,800 market positions, and we have more than 100 active participants, which we will look at a little bit later. Included in our data source is the split of the specific industries that we can look into for remuneration trends. Now, we refer to these industries as circles within our data set. Now, currently we have 16 circles, including Namibia National as a whole. If we look at the circles within REMchannel, Namibia National would be the ocean. All the other circles would be the rivers that feed into the Namibia National Circle. In other words, when a participant joins the survey, they automatically form part of the Namibia National Circle and also one industry-specific circle. Now, you might be wondering how a circle is opened or established. An industry circle is opened when a minimum of 7 participants or 7 companies within the same industry have subscribed to REMchannel. We focus on growing our survey by building it by industry type. Now, let's have a look at the industry circles on REMchannel. We have financial services, the retail sector, a split between the private sector and the public sector or public enterprises. Public enterprises are then split by the 3 different PAYGA classifications according to the PAYGA Act, PAYGA 1, 2, and 3, that's commercial, non-commercial, and financial entities. Then we have the banking sector, retail banking sector, the technical sector, the mining sector, higher education, Namibia fast-moving consumer goods, manufacturing, and finally financial services private sector. We are also currently focusing on opening new circles, which include hospitality and tourism, the insurance industry, and then energy or petroleum. But to be clear, these circles are not yet open, hence we don't have sufficient data sets for those industries. What happens when a participant requests to be part of a circle that is not their primary industry? We have to request from all participants in the said industry circle to grant their permission to become part of the industry circle. Should you want to be an extra subscription to an additional circle that is within your industry, you can by all means join, but this will come at an additional cost. In a nutshell, when subscribing to REMchannel, your subscription includes access to the Namibian National Circle and one industry-specific circle. Should the need to arise to gain access to more than one circle, please contact us and discuss the options and the fees involved. So, for Namibia Financial Services Sector, herewith we have the list of participants subscribed to REMchannel, which forms the basis and the source of our data analysis today. Afrocentric Health Namibia, Agribank, Alexander Forbes, Bank BIC, Bank of Namibia, Bank Windhoek, Deloitte Namibia, FNB Namibia, GIPF, Inoharath Capital, Letshego Holdings Namibia, Liberty Life, MBA Fund, NamClear, NamFisa, Namabri Nampost, the NSX, Nampost Financial Brokers, Nedbank Namibia, Old Mutual Namibia, Payments Association of Namibia, PwC, PPS Namibia, Retirement Fund Solutions, Sanlam, Santam, and finally Standard Bank. Now that we know who we will be comparing with or which industries we are comparing against each other, we need to understand what we will be comparing. Now, all organizations pay differently. Some pay basic plus benefits and others pay total cost to company or total guaranteed package or cafeteria packages. But what's important to understand is within REMchannel, we incorporate all items that form part of total guaranteed package. And the definition for that is the items that are included in the total package are all payments and benefits of a fixed and regular nature and are capable of exact valuation. People are usually entitled to these payments and benefits when they show up for work. So we do record some variable income like overtime and bonuses, but it's not included for comparison purposes, and this is to ensure that we compare apples with apples. Now, what's normally included in total guaranteed package is basic cash payments, annual guaranteed bonuses or 13th check, pension, provident and medical benefits or contributions, and that's specifically employer contributions, company car benefits, housing allowances, subsidies, free or cheap housing, telephone tool and computer allowances, all type of fixed allowances like car and travel allowances, entertainment allowances, and then we also specifically include other cash benefits which run through the payroll and which are paid on a regular basis. We also incorporate other non-cash benefits, for example, Social Security or benefits that they receive in goods which can be converted to a cash value. This is what we use to compare with within the REMchannel market data. In this next section, we will look at some market statistics. First of all, remuneration package composition. We will look at how packages are made up of in the Namibian market. Here we have a view of how remuneration packages are structured within the Namibian financial services sector. So how do employees manage their package structuring? Or what type of package structuring approaches does organizations follow? Now the split is provided in the various levels of staff, executive management, general staff, and unionized staff. And then we have a split view. On the left, we have basic salary plus approach, and on the right, we have total package. Now we can see that total package within the financial services sector slightly dominate more than basic plus benefits approach, where executives use total package of about 78%. 80% of management make use of total package, and then 64% and 38.5% respectively general staff and unionized staff. So how are total guaranteed packages made up of, specifically within the Namibian financial services sector? Now within REMchannel, you can extract the data in the different employee categories, executive, management, and general staff. But we've put together only two comparisons here to look at how management TGP is made up of versus staff TGP. Now they are fairly similar, where management has slightly less cash principal and larger housing subsidy allowances. We see guaranteed bonuses on both sides, but staff normally have larger percentage going to guaranteed bonuses, as normally you have bigger incentive schemes, bonus incentive schemes on management level. Then we look at retirement schemes. So management has a larger portion going to retirement, where general staff is about only at 9%. And then on medical scheme, that is quite interesting, medical benefits. For general staff, a larger portion goes towards medical, and where on management level, slightly less, only at a 6%. We see benefits like vehicle benefits, which is company cars or even travel allowances. On management, slightly more than for general staff, as they are normally required to travel a bit more. And then other cash benefits are fairly similar between the two levels. The next section of market statistics continues, and here we will have a closer look at what the effect of our current inflation has on annual increments. So what has happened with annual increments granted since January 2020 up to now, June 2020, versus what's happening with the inflation rate. So normally in this section, we will look at the variety of elements that need to be taken into account when budgeting and negotiating on salary increases. A variety of elements can determine annual increases like union negotiations, individual and company performance, economic forecasts and affordability, and obviously cost of living. But 2020 obviously is very different. And the question now is, with a very low CPI rate, how will this influence annual increases? And should organizations be considering granting increases to employees? Would the low CPI come to any advantage to employees and both employers? So normally there's a close correlation between the CPI and annual increases granted. But 2020 will prove to be different. Some organizations argue low CPI does not warrant a cost of living adjustment and will not necessarily provide salary increases. And this is what we've actually seen in the past 8 months of 2020. We've seen increases being granted up to about February in 2020, and after that we've seen a steady decline in month-to-month increases that have been processed through our survey. So some market statistics: CPI at July 2020 is now standing at a 2.1%. The average CPI over the past 6 months is also at 2.1%, and the average CPI over the past 12 months is a 2.6%. So in the next slide, we'll have a look at what the reported pay adjustments are for Namibia National as well as the financial services sector. In this slide, we look at the reported pay adjustments for the Namibia National database as of August 2020. With the pay adjustments, we extracted by employee level, executive management, general staff, and unionized staff. And then we have a view of what the increases look like for the last 12 months versus the predicted increases for the next 12 months. So if we maybe focus more on the median elements, on the executive level, we see on basic salary plus benefits approach, the increases are fairly the same as for the last 12 months and the next 12 months, and we also see the same on total guaranteed package. For management, we do see a slight difference in basic salary plus benefits approach. The increases were more than predicted for the next 12 months, and on total package it's actually very much the same. Now for general staff and unionized staff, this is where we see significant differences in increases. On the basic salary for general staff, The increase for the last 12 months was about 6%, and now it's predicted to be about 5% in the next 12 months. On unionized staff for basic salary, it was 6.5% in the last 12 months and predicted only at 5% for the next 12 months. Also on the total package for unionized staff, we see there is a decrease where it was at about 3.9 or 4% in the last 12 months and only predicted below 3.5% for the next 12 months. Now, after having a look at what is happening in Namibia National as a whole, let's hone in on the Namibia Financial Services Sector and what the reported pay adjustments look like. On the executive level, we do see a significant decrease in predicted increases for the next 12 months to a 2.9% versus a 5% in the previous year. On total package, it's actually slightly more than it was in the last 12 months at a 4.9% versus a 4.4%. On management level, we also see a big decrease on the basic salary benefits approach, a 5% increase in the last 12 months and only predicted at a 2.9% in the next 12 months, which is fairly aligned with the current CPI indicators. Total package, very much the same as for executives, 4.6% in the last 12 months, but predicted 4.9% in the next 12 months. General staff and unionized staff is fairly similar to the increases granted in the last 12 months. On basic salary, there is a decrease on the average, 5.6% in the last 12 months, and then predicted a 4.3% in the next 12 months. For unionized staff, we also see a slight decrease on basic salary plus benefits approach, where there was almost a 6% increase in the past 12 months, but then a predicted 4% in the next 12 months. In this slide, we've extracted from REMchannel the salary review months for the Namibian financial services sector. And what we see from the statistics is basically who within this sector will be granting increases. In other words, when the new data will be captured within REMchannel. Now, why is this important? Why do we want to look at it? For budgeting purposes, of course. So every organization has a timeline or a cycle in which they start with the budgeting processes in terms of salary increases, and we need to base our decisions on relevant market data, so how the market has changed in terms of increases, to incorporate that in our budgeting process. Now, important if you are a subscriber to REMchannel and you use our market statistics is to know when to use the market data specifically. Now, you'll see within the Namibian financial services sector, the majority of increases are granted and processed in April every year, and then also in January. So using the market data subsequent to April, so let's say from May onwards, would give you a fair indication of the majority of increases that were granted within the financial services sector. With the next section, we will start looking at the remuneration trends for the Namibia financial services sector very specifically for the period from February 2020 up until August 2020. So the first trend we would like to share with you from the financial services sector is to have a look at the job discipline distribution for financial services in Namibia. Now, a job discipline distribution is basically a summary of the different job disciplines captured within the sector. Now, with every job or every employee data point that we load within REMchannel, that position is matched to a specific job discipline. For example, support services, sales, a finance function, or an HR function. And then we can extract the data to see what is the majority of job disciplines within a sector or even within your organization. Now, for financial services, it comes as no surprise where the sales function or discipline is the majority job function we find within the sector at about 3,500, and that is followed and supported actually by your support services type disciplines. And thirdly, coming up very much more and more every year is your risk and compliance type of disciplines. Now, the question you may ask is, why is it important to have a view or have a look at what my job discipline distribution looks like within an organization or even within a market segment as a whole? The question you have to ask yourself is whether your remuneration philosophy and strategy actually links to the job discipline that leads within your business. Now, normally, the job discipline that leads within an organization is actually your core business. And does your remuneration philosophy and practices actually link towards incentivizing your core business job disciplines? And is there a distinguishment between your core discipline remuneration practices versus your support service practices? In this next segment, we look at the sample movement for the financial services sector as of August 2020. Now, since COVID and lockdown, we've seen and heard in the media of significant retrenchments happening in the market. Now, with the endeavor to see what the impact is on the overall workforce and within our data sample set within REMchannel, we gauge on a monthly basis the movement in the sample size per employee level to see if we can actually keep track of staff movements and possible retrenchments within the data set. So here we look at financial services very specifically. And the only decrease in the sample that we've seen is on top management and executive level, where in February there was a total sample of 21 and now only 15. With the rest of the employee levels, all levels have actually increased. Within REMchannel, you have access to a variety of interesting market statistics. And here we've extracted the market statistics for gender distribution and age distribution for the financial services sector. Now within this sector, the sector is definitely female dominated, as the sample size makes up 62.4% for female and only 37% towards males. Now for the age distribution, we see that the majority of the workforce within financial services falls in the age group of 26 to 35, so definitely within your millennial group. And then 28% in the age group 36 to 45, and then we do have some older generation groups, 46 to 55, and then up to 60 makes up about 20% of the workforce. So it's fairly split into three segments in terms of age distribution. And the question we normally ask here, why is it important to look at your age distribution, is just to understand whether my remuneration philosophy and approach is catering for the various age groups within the organization in terms of benefit structuring. Our next trend analysis is to see how Namibia National as a whole compares with our neighboring countries, specifically South Africa and Botswana. Now, normally we would expect that South Africa is the highest paying country within the SADC region, but the statistics show a different picture. For Namibia, Namibia is in the orange, the first column. We actually see on the majority of the employment equity levels that Namibia leads, and South Africa only overtakes Namibia on senior management and normally on executive level. Now that we've seen how the overall national markets compare with each other in terms of regional comparisons, let's look at how financial services in South Africa compares with the financial services in Namibia. Now what we see here is Namibia actually leads on the South African data on the lower levels up until top management and executive level. And on average, Namibia actually leads slightly with a 3%. Included in our REM trend analysis for August 2020, we perform a Namibia industry comparison to identify and to see which industry is leading within the Namibian market and by how much. So which is the leading industry in Namibia? Mining. Mining is the clear leader on an average of 75% within the market. The retail segment is lagging the market norm by about 31%, and finance and banking industries are just above the market by 31%. Manufacturing actually lags the market norm with 16%, and our technical industry or discipline leads the market by 63%, following just behind the mining industry. Focusing again more on the Namibian financial services sector, here we have a snapshot view based on the employment equity levels of the remuneration within the market segment, split into the various percentiles, the 25th percentile, the 50th percentile, and the 75th percentile. And we've also included the market average within the sector. We'll leave it up for a few seconds for you to have a look at. During these unprecedented times, we obviously want to know what is the market movement or the shift within remuneration levels since the COVID-19 outbreak or lockdown and the overall economic impact it has had. Now, from February to August 2020, for the Namibia Financial Services Sector very specifically, we've actually seen an average increase from February to August of about 4.8%. And we evaluate that by the specific employment equity levels to see where we see shifts within the remuneration levels. And we've only seen a decrease or a shift downwards for the skilled and technically qualified levels. And with all other levels, we've actually seen an increase. REMchannel's report functionality includes the ability to extract remuneration review by gender, race, and then by grade level. Now here we've included what may seem as a controversial topic, but it is interesting to look at, is the remuneration distribution by gender specifically. The split between females and males, and we've included the statistics on REM from the medium market data, so the 50th percentile, and the average within each gender. Overall, the gender distribution in terms of income is fairly equal within the Namibian financial services sector, which is a healthy view to look at. We do see some slight differences in terms of the senior management levels, and then maybe on your lowest level for your unskilled or defined decision-making levels. But overall, this is a healthy view for the financial services sector. To continue with our REM trends, we now have a look at how the Namibia private sector pays or compares with public enterprises. Public enterprises is in the dark maroon color, and pink represents the private sector. Now, we do expect that the private sector pays more than public enterprises as a whole, but that is actually not the case. And we've seen for a number of years now that the public sector or public enterprises tends to pay slightly more on lower level employees than on higher level employees. You will see from unskilled level up to about qualified professionals or middle management, the public sector actually leads on the packages offered to employees. We only see a switch around or a shift from senior management upwards, where the private sector would then pay more than the public sector would. So staying informed of what's happening in the market and what's happening in day-to-day operations for organizations and their HR-related practices is extremely important in these unprecedented times. Now you can follow us on our Facebook page and our LinkedIn page as well as Twitter to stay informed and up to date with relevant information that we share, and knowledge share, articles, and interesting facts from what's happening in the market. We want you to know that we are here to help you and your HR team and with all your remuneration challenges. So please feel free to contact us should you have any need for consulting work. That brings us to the end of this August 2020 remuneration trends analysis for the financial services market in Namibia. We would like to thank you for your interest in listening to our podcast, and please keep up to date with all the relevant information that we share. On the screen you will see our team, our consulting team that can assist you with all your HR challenges. And furthermore, I would like to close off and say good luck with the remaining few months of 2020. We've come this far. If we keep pursuing what is important and the elements that need to be addressed on a daily basis, we will eventually make 2020 a successful survival year. Thank you very much and goodbye.